4 cryptocurrencies that are likely to increase in price by 300 to 400% over the coming weeks and months. And our job using technical analysis is to identify the low so we can sell high. And we're going to really lean on Elliott wave theory today as well. So I've been trading the markets for 18 years. My name is Jagir, featured in the best-selling book, High Probability Trading Strategies. And I'm going to be taking you through a journey today. So with that said, let's dive straight in. The first cryptocurrency we're going to look at is Phantom. What we want to do first is use 4 independent technical factors, starting with the pattern position using something called Elliott wave theory. We want to know that the markets typically move in 5s and 3s, and we're trying to determine at what stage of the psychology is the market in. Are we in a bullish phase or in a corrective phase? So we can pinpoint, should we be looking to buy, should we be looking to sell, or should we be looking to stand aside and wait for a particular pullback? So the first thing I'm going to do is just going to draw on the technical analysis with pattern, price, time, and momentum, so we get a real good feel for where Phantom is in its market position. So I've done the technical analysis for Phantom. Now there's a lot on the chart, and I'm just going to talk it through. The first thing is in 5s and 3s, what is the Elliott wave position of the market, which helps us identify in the buying and selling psychology. So what we have with Phantom is this nice move up. We call this a macro wave 1. We had this nice pullback, which is typical for a correction for a wave 2. In green, we had this nice 1, 2, 3, 4, 5 of a 3. So there's psychology within the psychology, and here we've got a 5 of a 3, and we can be fairly confident this is a wave 3. The reason being is we've had a pretty steep pullback, which is typical for a wave 4, and it's broken down to what looked like to be an A, B, C correction. So remember I said markets move in 5s and 3s? Well, this is what I'm referring to. A nice 1, 2, 3, 4, 5, followed by an A, B, C correction. That's textbook. And then we always want to ask ourselves the question, an ABC of what? And in this particular case, it looks like an ABC of a wave 4. Now, you've also seen some horizontal and vertical lines with some pink boxes. These are high probability price and time zones for typical buying and selling behavior. So with a wave 4, what you want to be aware of, and you want to be able to do this yourself, is you want to be able to measure a wave 3, and then a typical retracement for a wave 4 is a minimum of 38.2%. and a maximum of 62%. That's the most common buying and selling behavior. And there's a few Elliott wave rules, one of which is that wave 4 cannot trade into the range of wave 1. And this meets that criteria. Another rule is wave 3 cannot be the shortest out of wave 1, 3, and 5. And we look like we're on that wave 5. So with this said, we can now be fairly confident because we're in the time and price zone for this wave 4, and we've got this initial move up, it's likely, but not guaranteed yet, that we're making a wave 5. So with Phantom, there's going to be 2 scenarios that's likely to play out. The high probability one that I would lean on, that's looking like the case right now, is this looks like a wave 1, a wave 2, and we're making a potential wave 3. We should anticipate a 4 and then a 5 over 5. In other words, the lower degree count in green will be a 5, and then the larger degree wave count in the blue will be a 5. So the price targets for Phantom, the typical minimum should be around $1.26, and the typical maximum should be around $1.66 thereabouts. So we are talking about 60-70% increase, maybe 100% increase in price thereabouts. The other scenario that may play out is sometimes corrections are not just a simple ABC correction. We may get a complex correction. And there's a big clue if that's likely to occur. I'm going to tell you what it is. So we've got this ABC over here. This might just end up being a wave D, and then we might get one more sell-off. What will be a big clue that that's going to be the case? Well, I'm just going to quickly draw it onto the chart. It's called a pattern reversal signal known as a wave overlap. So if the price where it is currently drops below 76 cents, if it drops below that, that's called a wave overlap. That's a sign of weakness, and it would indicate that this is a corrective structure, and we're probably going to make one more low. Now, if you haven't bought Phantom yet, that would be a good thing because you can get a better price, but it should also not close into this wave 1 territory as well. So with Phantom, just to summarize, it looks like we've completed a wave 4, and we look like we're making a wave 5, and we should anticipate a 5-wave structure, and the price target zones is $1.26 to $1.66. Now, if it extends beyond this, there are some overextended regions as well that we want to be aware of, but they're only really useful if we actually go beyond $1.66. So with that said, now let's go into our second cryptocurrency and start with a blank canvas. This has been highly requested by you, and I want to make sure I deliver. It's ICP. Now, initially when we're looking at the chart, it might not be obvious what's happening. But again, we want to start with, is there any clear 5-wave structure of some sort? Also keep in mind that 40-50% of the time, there's not going to be a clear pattern structure. So let me draw on the TA so we can make sense of what looks like is occurring, and then we can get a feel for what's likely to occur in the weeks and months ahead. So with ICP, it's really straightforward. What I see happening right now is from the lowest point, we've had this, what looks like to be a 5-wave structure to the upside. What happens after a 5-wave structure? Well, typically is a 3-wave correction. And the big question is this or this likely to be the end of the correction, or are we likely to get a longer drawn out correction? Well, I believe it's going to be the latter. Let me tell you why. Because after a 5-wave structure, we can measure the price movement, and a typical retracement after a 5-wave move, especially if it's the first 5-wave move up, is a 50% retracement. So ICP has hit that 50% retracement level at $11.94 and just below. So from a price perspective, the correction could be over. However, we want to be aware that from typical buying and selling behavior, the amount of time taken for the 5-wave structure, 38.2% retracement from a time perspective is the typical minimum time for a correction. And we can see this is nowhere near that point. So with that said, what's likely to occur, and again, we're working with probabilities here because we never know what's going to happen. We just can get onto what's likely to happen. So here we're probably going to get this downward movement. We're probably going to get an upward movement, but this is probably just going to be a wave B. So this will be more than likely a wave A, a wave B, and we'll probably get one more sell-off coming into the range of between $6, $7 to $9 thereabouts. If that does occur, that's going to be the best buying opportunity, because after an ABC correction, we're more than likely going to see new local highs way beyond this point, and it's probably going to be a bigger move than this as well. This will be probably a 3, 4, 500% increase in price. And if you're trading it, you can get a nice tight risk reward. The other thing that we want to be aware of is the momentum position. So I've got these dashboards down here that I've created myself, and it just tells us that the weekly trend, which is the higher time frame trend, is strong up, is an upward trend. So it indicates that we should have a bias towards sideways to up. So if that's the case, that would support this as a ABC. What we want to be on alert for is if this high, if it does get exceeded with confidence, then we might need to just review this again. But if it doesn't, and the weekly momentum becomes bearish, then we're probably going to see a sell-off similar to this over here. And that's going to be the most typical type of correction. Last thing with ICP before we move on to the next pair is the weekly chart. Just want to quickly look at the momentum with the weekly. What we just looked at on the dashboard, but what it basically means is the blue line is above the red in the oversold zone. That just indicates that we're at or near a weekly low, so the buy should be sideways to up. So again, initial 5-wave move up, we should anticipate a bigger degree correction. That's the most typical buying and selling behavior, and then a nice movement to the upside. Let's just actually do a price projection. We'll do a price projection with ICP as well, even though this correction is not finished, but just to give you a ballpark figure, we'll just quickly do it over here. And if the price does come down to this point, I'm just going to do one projection. It's really reliable. But again, I'm just looking at this as if this correction occurred as we anticipate, we're talking about $39. So if it does pull back to around $6, we are talking about maybe a 500-600% risk reward or increase in price. And if you're trading it, you can do even better. So with that said, let's move over to our third cryptocurrency. Our third cryptocurrency is Ocean Protocol, and it's got a very nice price structure. And we love beautiful pattern position because it makes our life a lot easier when we're trading. So before I put on the technical analysis, feel free to pause this video and have a look for yourself. Can you see any clear 5s and 3s? And if you can, that can really help guide you with other pairs that you're looking at as well. And remember, sometimes we're at the position of the market where the 5 or the 3 is not complete. So I'm now going to draw on the technical analysis to give you a feel for the pattern, price, and time position. And then we'll also double check the momentum to see what's likely to occur over the coming weeks, but then also plan and prepare for the coming months. So this is the technical position that I see from my 18 years of trading experience. What we have on our hands right here is this initial nice move up, and it looks like it's broken down to a 5-wave structure. We call that a wave 1. We've had this long, drawn out sideways move. We don't need to put a pattern on it because if the pattern's not clear and it doesn't serve us, there's no point. But we can definitely say it's a correction because it's an overlapping wave structure, and we call that a wave 2. And then we've had this beautiful, very clean textbook 1, 2, 3, 4, 5. Doesn't get much cleaner than that. We call that a 5 of a 3. And after a wave 3, we typically get a wave 4, which is a corrective profit-taking wave. And we've had this nice pullback. And the question is this the end of the wave 4? Or is it likely to be the end of the wave 4? And we want to use price and time. This is why we use independent technical factors, because Elliott wave by itself cannot give us all the answers or the high probability answers. But when we use price and time and momentum, we can get a real feel for what the market is doing. So I've done the typical retracements, price retracements for a wave 4. In other words, we measure wave 3, how big was the move, and a typical retracement for a wave 4 is 38.2%. And we can see we've gone below that point, which is a good thing to indicate we might be at or near the end of a wave 4 correction. However, a typical time, as in how much time does it take for a typical wave 4? Well, it's 38.2% retracement. What that means, if I just draw it on, is how long did this 3-wave structure take, as in this wave 3? And then we project forward 38.2%, and we can see this is nowhere near this point. So this would indicate to me that this is not the end of a wave 4, and it's just the first leg of the correction. So we can be fairly confident with Ocean. We're more than likely going to be sideways to up, but it's probably only going to be a wave B. Unless we get this high taken out with extreme confidence, we're probably going to see another sell-off coming into the market, and we want to be prepared for that. This is where you can do some short-term trading if you're looking to trade this, but if you're really looking to get the best buying opportunity before the market really takes off, at this point is more than likely going to be the case. And 80 cents thereabouts. So more than likely we're going to see Ocean move up to around $1.40 thereabouts, in that range, not exceeding $1.60, $1.70, and then pulling back down to 80 cents and maybe even, testing the 60-cent range. And then for the price to increase by 3, 4, 5, maybe even 6, 700% from that point onwards as well. The last thing I want to cover with Ocean is the momentum position. So again, we always like to use 2 degrees of momentum. Higher time frame, in our case, is the weekly chart. We're currently looking at the daily chart, which is the immediate time frame. And I've got this dashboard at the bottom that we covered earlier. We see the weekly is in a strong uptrend, and it's called a slower look back, is oversold. So what that tells us is that we should have a bias to sideways to up over the next 1, 2, 3 weeks, maybe even 4 weeks, which supports our case for a wave B. And then when this is overbought and bearish in terms of the weekly, we're probably going to see some type of follow through to the downside for a wave C of a wave 4. It should not go into the range of this wave 1. And then we should see a continuation to above this point for a wave 5. And that would complete a nice bigger degree 1, 2, 3, 4, and then a 5. And then if we do go above here, and this does occur, we can do some technical analysis to project some high probability end of wave 5 price and time zones. So last but not least, let's go into our 4th cryptocurrency pair and do some TA. Pendle was another cryptocurrency pair requested by you. So I wanted to do some TA, very similar to Ocean. But again, test yourself to see, can you draw 5s and 3s? Can you identify the pattern position? And remember, we want to use a maximum of 3 degrees of Elliott wave counts, but more often than not, 2 degrees is more than enough. There's actually 9 degrees that's available to us, but we don't need 9 degrees for making money. 2 is more than enough, and pretty much no more than 3. So I'm going to draw on the TA so we can get a real feel for the buying and selling behavior, so we can anticipate what's likely to occur with high probability and exactly what we're waiting for, so we know when we should be buying, when we should be selling, and when we should be just standing aside and looking for a better opportunity. So I've drawn on the TA, and this middle part of the chart looks incredibly clear. Like this part here is a very beautiful 5-wave structure. But then we always want to ask the question, a 5 of what? Is it a 5 of a 1? Is it a 5 of a C? Is it a 5 of a 3? What is it? Well, we can then look at the prior part of the market. So this part was a correction, which looks like a wave 2. And prior to that, it's looking like it was the initial move up, which is a wave 1, a wave 2, a beautiful overextended wave 3, and we look like we're making that wave 4. And the same question, is this wave 4 complete? Well, there's a couple of things that tell us it's unlikely to be complete. The first one is it has not hit the minimum time. In other words, we measured how long is this wave 3, projected forward 38.2%, and we can see this low is not near this point here. That's the first clue. The second clue is this is an impulsive wave structure, and corrections don't typically finish in an impulsive structure. They're more of a corrective overlapping structure like this, like this, like this. So that's another clue as well. So if that's the case, then this is likely just to be the first leg of the correction. We should anticipate a leg up, which is likely to be a wave B. Even though this is really impulsive move up here, it's still likely to only be a wave B. Unless this gets exceeded with a lot of confidence, this will be the high probability outcome. And then we should anticipate another sell-off to complete a wave 4, where the price should not come into this range down over here, which is unlikely anyway. So again, I've actually got, let me just change this. This should actually be 38.2 for wave 4, and I can just quickly update this. Just update this here, there, and it's more likely to do this. So I wouldn't be overly surprised. You know, this looks very impulsive. So I wouldn't be overly surprised if it tests this high or even maybe exceed this high, and it could end up being an irregular ABC correction. But it's highly likely we're going to see another sell-off testing this low, similar to this over here. And if Pendle gets down to around $3 to $4, at that point, if this does occur as a wave C over wave 4, then we're likely to see some buying coming into the market, where we see new local highs exceeding $8, probably getting to $12, $13, $15 thereabouts, $14 thereabouts, which is the 3, 4, 500% increase in price. And if you're trading it, you can get a nice tighter risk reward. And if you're just buying, then you can kind of plan and prepare what's likely to occur. There you have it. We've covered 4 cryptocurrency. Which was your favorite, and which one have you got the strongest feel for as well? And let me know in the comments below what you want me to cover next to do high-level expert TA, leveraging my 18 years of trading experience, just using pattern, price, time, and momentum. And don't forget to like and subscribe to the channel so you get notified of our next upcoming video. Until then, I'll see you next time.